The moment you get paid in the US, taxes follow, but how much and how you file depends on one thing: employee or freelancer. Let's break down the exact differences and what Kenyans need to know both for IRS and KRA. Why this matters? In the US, the tax system treats employees and freelancers very differently. The forms, the obligations, and how you file your returns all change. If you work online, drive Uber, or do side gigs, this directly affects you. If you are employed, you receive a W-2 form from your employer. Taxes like Social Security and Medicare are already deducted before you are paid. You still need to file, but most of the work is already done for you. Freelancers receive either a 1099 NEC or 1099K if you earned over $600. No taxes are withheld, which means you are responsible for handling it all yourself. To the IRS, you are considered self-employed. There is more responsibility for the freelancers. As a freelancer, you are handling more. You will need to pay quarterly estimated taxes, cover self-employment tax, and keep proper records. You are basically your own accountant or close to that. Some key tips for freelancers: always track all your income and expenses. Use tools like Wave, QuickBooks, or even a clean Google Sheet. Set aside 25 to 30% of what you earn. It will save you from stress later. Final reminder: whether you are a W-2 employee or a 1099 freelancer, you must still file your US tax return every year. And if you are a Kenyan citizen or resident, don't forget your KRA filing too. Stay compliant on both sides and you will avoid future penalties. Please subscribe for more simple diaspora tax tips. Share this with someone working online or abroad.